Good afternoon and welcome to this week's market video. My name is Will, I work on the dealing desk and I'm joined this afternoon by Bill Hubard, who's going to shed some light on this week's most pressing issues. So Bill, let's start off with the news that's just happened. The Bank of England, they've made a statement for the first time ever, having not changed anything.
I think that's the key because, as I was thinking about it yesterday, if Mark Carney wants to, quote, solidify his position as the governor of the Bank of England, even if it was a question of the Bank of England made no decision whatsoever, but as you saw, basically the decision or the statement said that it basically succinctly interest rates are too high. As we saw yesterday, we had a massive move up with the sterling dollar. I mean, it moved about 150 pips, mainly because we got the PMI survey, which came in much stronger than expected. Now, if you're a financial guru, which I'm not, or a technician, whatever, all of the quantitative easing decisions by the Bank of England had always been based with all three of the PMI surveys were at 53 or below. Now, what we have seen, and this is why the market yesterday really, basically covered most of their shorts in cable, was the simple fact is, for June, all three PMIs were 55, okay, which meant that if you were looking at the spread basis, going into today's meeting, there was an 18% probability that we would have no more quantitative easing. But with the statement we got from the Bank of England, and as I say, as you just said, the key was we got a statement with no change in rates, no change in quantitative easing. And I mean, the last I looked, cable was, it dropped more than 200 pips against the US dollar.
Yeah, it's 151.
Maybe we will get more quantitative easing, which I still feel we will. August may be too soon because of the inflation month, but I do expect, even looking at the data that we've got, I would expect another 25 billion in quantitative easing.
And you talk about these PMI figures that came out yesterday, particularly services, which is such a strong part of the UK economy, and the markets didn't take the news very well at all.
No,
I mean, when's all this going to end? When good news is good news, right?
Well, I think it's a question of the problem we've got is that, remember, last week was the end of a quarter, the end of a fiscal year. Also, remember today is, that's why I'm wearing the shirt here, Independence holiday. So we had half a day yesterday in the States, a full holiday today, and tomorrow we get the key figure, which is non-farm payrolls. Will or won't that justify the potential for tapering from the Fed?
And how do you expect the number to come out tomorrow? Are you expecting, let's say it comes out as expected, about 175,000 new jobs created?
I think the key thing, my call is for 165,000. Also, for the rate to go from 7.6 back to 7.5. Now, the key thing that we've got is, and I don't want to get too technical, but Janet Yellen's husband, and Janet Yellen is the odds-on favorite to become the next chairperson of the Federal Reserve on the 31st of January next year. Her husband wrote a very, very influential paper in reference to employment versus inflation. And the simple fact is, employment will continue to either be no change or go up if inflation declines. Because the simple fact is, why should I have more people, hire more people at an expense if I'm not making the money? So the key thing here, with inflation below 2%, the only reason we had the uptick last month from 7.5 to 7.6 is, I think there were like 400,000 people that said, I better get on the bandwagon. I don't care what I'm being paid, but if I've got a job and the market starts to recover, I will be able to keep my job, and I think that's key right now. So if you believe in employment/inflation, with inflation not going anywhere, the employment rate is not going to drop to the level the Federal Reserve wants it to.
Okay. Something else I want to touch upon is China. It seems to be holding the world back. Lots of bad news coming out of there. They're not growing as fast as everyone was anticipating. I mean, even Anthony Bolton of Fidelity China Special Situations, he's thrown in the towel. He's failed, hasn't he, really?
Well, it's very interesting. I mean, maybe I shouldn't tell you about it. I bought into that fund at 100, okay? Now, I shouldn't tell anybody. I sold it at 123.50. For the simple fact is, I guess I didn't read the prospectus because I thought maybe the last page of the prospectus said we're going to issue more shares. Well, I bought it because I believed in China. But the simple fact is, wait a minute. So Goldman Sachs has reduced China's growth next year to 7.5%. I mean, 7.5%. We won't have that kind of growth like in 3.5 years combined here in the UK. So it's a question of, yes, the market was saying, well, we've got a problem with the Eurozone, the US isn't going anywhere, the UK. So China will bail us out. But what we've seen, and the classic has been, where everybody was buying bricks or emerging markets 2-3 years ago, as you just said, with the Fidelity China situation. What we have seen now is the risk-on, risk-off trade. And it really started on the 19th of May when people, and I still feel that people misread or misinterpreted what Bernanke or what the FOMC minutes said. The market sold off because we got a weaker than expected Chinese number. The same time, next month we got a weaker than expected Chinese number. So the market was really, wishing, hoping, praying. Well, we don't really care about what's happening in the world. China will bail us out. Well, China hasn't bailed us out. We've seen the situation in Brazil. We've seen the Russian situation. We've seen the decline now in India with the rupee now above 60 something versus the dollar. Well, that's not helping. And then also, whether it be Egypt, whether it be Turkey, it's risk on, risk off. We've seen gold being sold off. And, the trade has been, almost just buy the US dollar and we'll wait to see what happens, again, what happens after 1:30 British summertime tomorrow with US non-farm payroll.
Yes, exactly. Now, we haven't heard much of the Eurozone of late.
Thank goodness.
Yes, a bit of a nice relief, but we've been hearing about China and the States and Bernanke. That's what we've been hearing about. What's going on over there?
Well, I think if you have been looking, last week, 4 or 5 times, and even earlier this week, we tried 4 or 5 times to break 1.30 euro dollar. Well, as soon as we got that bad news out of Portugal, forget what's happening. All of a sudden, Portugal said, oh gosh, Portugal's back in the news. Greece will be back in the news. Italy will be back in the news. And we've had a massive sell-off in the euro dollar. And as I say, I know no change in anything with the European Central Bank. I have not heard what Mr. Draghi said in reference to the Q&A. And I'm sure that's going to be the question because twice in 1 week, several weeks ago, Mr. Draghi said, Super Mario, we'll do everything. We'll do anything we can to protect the Eurozone. Well, okay. Doing something.
And the euro will last, will it? As a currency?
You probably shouldn't talk to me because, I have been anti the euro ever since the European Coal and Steel Community of 1957. Looked like a good idea at the time. But I remember reporting when I was at Bloomberg, the first trade of the euro dollar was 100. Well, 6 months, 7 months later, we were down to 82. And to me, that to me is a better level. It always works good when, the shoe always fits when the market's only one way. But what we've seen is now Spain having a problem, Italy not coming around, again, Portugal coming back into the market, Greece, Cyprus, and even what we've seen now, I think we have consumer sentiment the worst it's ever been, since that slight problem in 1789 with the French Revolution. And what do we have? 20. The worst German car sales in 20 years. So, it's starting to affect the rest of the Eurozone. Yeah. And I think one of the interesting things about is that Barack Obama is having 2 or 3 days of serious talks with Angela Merkel. Now we're talking about, a European Union, U.S. trade agreement. Well, if it was working so well with Croatia and Slovakia and Slovenia and some of these other places, I don't even know where they were, why would the European Union want to be talking to somebody else?
Yes. Okay, that's an interesting thought. Mark Carney, because I'll go back to this. Yes. He's got some options, has he? With
a lot.
With what he could do.
Yes.
What would you say his options are? And then I want you to maybe just shed some light on what you think he might do.
I think his options, he has been given, a clean slate. Also, we know what his options are because having been head of the Bank of Canada, he has been very pro-U.S. Federal Reserve, whether it be quantitative easing or be he hadn't done it, because the Canadian economy really is a reflection of what's happening in the U.S. So therefore...
But they've come out much better.
Yes, they have.
Suffered quite
yes. And the simple fact is, I see him being proactive, and I hope all of our UK listeners, he's not a member of the boys club, he's not an old Moravian or an old Etonian or something like that. Yeah. although his wife was very upset about using tea bags or something like that, but that's neither here nor there.
She's an English woman, though.
Yes, but only by birth. She can't help that. My wife is English, but by birth. I think what we will see is, it'll be interesting to see what the vote is today, okay, which we'll get on the 17th of July. Then, of course, I don't expect anything to happen, but I do know that he's been given a wider directive by the Chancellor, and I think he'll use that. But it'll be quite interesting to see what the vote is today, okay? Was he in the minority? Did he vote for Q?
It's not 9 votes cast.
Yes, remember, and his vote is only 1.
Yes.
Unlike maybe Bernanke or Greenspan, and maybe in the last year or so, it's not one of these things where Greenspan can say, well, are you sure you want to vote for the others? Or Bernanke says, to William Dudley, are you sure you want to vote for this, that, or the other? Although each one of the things. But the key will be, how was the voting on the side?
And so let's say we get a 4 to 5 vote. That will be big news.
Yes, it will be, okay?
Big moves in all sorts of
I
markets.
think the market going after yesterday's PMI data, right? And the massive move in covering cable shorts against the dollar. The market was saying that we'll probably, worst case scenario, we'll get no statement today. The PMI is improving, and the vote will probably be 7-2. Now, with the statement today, as we saw, last dollar sterling was off over 200 pips. Yeah. Now, would we have 6-3, 7-2? It'll be interesting to see, because what we'll start to see is more of an internal sort of, not old boy network, and I don't expect to see taking the underground again, but the simple fact is, I think there will be a tremendous amount of internal negotiations, internal politics, and I think it'll be very positive for the Bank of England, which will make it very positive for the UK economy.